Hi, this is Tom Sedlak, General Manager at 33rd Company Property Management. Thanks so much for watching our video blog series. Today's topic, smart tips for new landlords, what you need to know for the Kansas City property management market, some good advice and tips for you for managing your rental properties or finding a management company to help you. Probably the first and most important tip that anybody can provide is to make sure that you are adequately insured when you put your rental property online. Whether you have a DP3, a BOP, which is a business owner policy, or a rental dwelling policy, make sure that you're adequately covered, not just for the structural, but also for the general liability. Read your policy. Rental dwelling policies are different than homeowner policies. There are vacancy maximums. 60-day vacancy is typically the maximum in most rental dwelling policies, which means that if you have an extended period of vacancy between tenants, your insurance will actually lapse after that 60-day period, and the only way to cover yourself is to get an addendum or an extended vacancy addendum that will extend your coverage, and that can be extremely expensive. Insurance companies don't like vacant properties. Loss of use is another item that's typically in a rental dwelling policy. That will cover you for any lost rents. If the home were to burn down and the tenant has to vacate, you could have several months of lost rent, and loss of use coverage in your rental policy will cover you for those losses as well. Change your utilities to the landlord account. That's probably the next bit of advice I can give, is make sure that when you do put your home up as a rental property, call all of your utility companies and put your name into what's called a landlord account. And the reason you do that is so your utilities are not inadvertently shut off when a tenant checks out. This can be particularly problematic in the winter time in the northern climates. If the tenant vacates in December, for instance, in Minnesota, and shuts the utilities off, and now guess what? In 2 days your home has no heat and it freezes, and you've got $80,000 worth of frozen pipes and split pipes and behind the wall water leakage, and it's a disaster. So a simple call to your utility companies can prevent all of that, and then the utilities will stay on and the billing simply reverts to you once the tenants vacate. Water utilities are important to track. Those are usually municipalities or cities or counties that provide the water utility service, and because they're government run, those unpaid bills from tenants can revert to the property owner's taxes, your property tax statement. So make sure when tenants vacate that you check that water utility to make sure that it has been fully paid before you disposition the security deposit to the tenant, because that again could transition to your property tax statement. Smart landlords tuck away a small percentage of their rent revenue every month for maintenance, repairs, and vacancy. Typically, a good rule of thumb is about 5% of the rent revenue, but it really depends on the age of the home, on the neighborhood you're in, how quickly your home rents, or if you have extended vacancies between tenants. All those sorts of things, can have a large impact on how much of a reserve that you would need for your home. We would consider also getting a home inspection every 3 to 5 years. And the reason is because if you have a professional home inspector look through your home, they can give you estimates for the remaining life for lots of the major structural components, including the roof, siding, concrete, as well as carpeting and linoleum, for instance. The nice thing is that now that you know what the expected life is and the end of life date is, you can start to budget in advance for these large repairs, and then that way you won't be surprised when all of a sudden you need a $4,000 or $5,000 roof replacement. You've already factored that in, and you've already started tucking money away for that as well. The last piece of advice, get a great CPA. Get yourself a savvy tax accountant or tax attorney. While TurboTax is great and can do rental property taxes, you're going to miss the boat on some things if you don't have a CPA get you flying right in the first place. The best advice for new property owners for investment properties is to sit down with a CPA, go through a bit of an interview, make sure that you're both in lockstep in terms of the tax strategies, how they're going to fit into your own personal life and your own other income, and getting you off on the right foot so that you're taking advantage of all of the deductions that are appropriate. At that point, it might be good to transition to TurboTax after the fact once you get yourself in good shape, but definitely at least start out with a good CPA to get you off on the right foot. Hope these strategies have been helpful for you. Thanks again for watching our video series, and if you have any questions or concerns about any of these issues, you're always welcome to engage a great property management company. 33rd Company would be happy to help you. Thank you.